All right, hey guys, this is John with Balcony DAO. I'm sitting with Bud, who is the co-founder of Tassin. Tassin is a tool, I would say, for founders and DAOs to find their path to tokenization. And it's really built, from what I understand of it, but obviously we're here to talk about it, to give people a regulatory correct way to release a token, which is obviously interesting to me because Balcony has way too many regulatory constraints. This is probably something that I could use, and basically everybody that we talk to here on Balcony and Shill is somebody who I think is doing something that I could benefit from and has an opportunity to kind of walk me through how their product would work in my use case and then Shill. So why don't you give us a kind of a top down on what Tassin does?
Sure. So we kind of backed into this whole Tassin does tokens, token launch platform. Where we started was actually in 2019. Our founder, Jay Yang, wanted to build a better crypto exchange that took all the best parts of a DEX, right? Self-custody, being able to predict, determine, write everything on chain, but get the speed of a centralized exchange. So centralized order book, netting, all the efficiencies that you get, dev tools tying in, institutional grade tools, right? Mm-hmm. So we went down the traditional fundraising model of knocking on all of the venture capital doors and saying, hey, I've identified this need. We want a better exchange. And none of them wanted to participate. They didn't really get it. They didn't want to kind of come in. So as a US-based company, Jay wanted to go down and raise money through a utility token, the pre-sale of a utility token. So trying to figure out how do you build the marketing, how do you build the legal entities, working with outside counsel, which we eventually brought inside, which is why we have such a strong legal sense.
That makes sense.
We did everything for ourselves first. So we ended up raising 19.4 million in token sales, and that was about a year ago, so April last year, and went about our business of building the exchange. So a couple months pass, and people figure out what we've done, people in our network figure out what we've done, and they say, hey, we're also a US-based company who wants to either sell tokens in the US or not in the US, or sell it as a utility or an NFT or a DAO. Yep. And they say, how did you go about doing it? So, well, okay, you sit them down and you say, well, what are your goals, right? What do you want to get out of this? Who do you want to sell to? What is the token used for? Is it like a direct DeFi product? Is it a hybrid? Are you trying to use it just for a community? And then once you set out all of the different variables that you need to figure out how to optimize, then we can start down the path of consulting or strategizing on what you should do. And again, it was months into us actually being builders, building our main project, that we finally just said hey, look, we have so many people who are asking us best practices to launch tokens that we packaged it all up, built a quick little KYC product to do all of the purchaser integration, like Securitize, right?
Mm-hmm.
Like KYC, token management, all of that. But really, it's the service we give is our own experience. The legal team that we brought in, we don't give legal advice, but we help strategize and package everything up that you can then bring to your counsel to act on. But it was really something we had to do for ourselves, mm-hmm. something that people asked us for, and then eventually we just said, okay, let's open it up to everybody. Because if you think Web 2, you spend all this time and money either creating IP or building a moat for competitors to not be able to cross into your space.
Yep.
And you say, hi, thank you, we're going to continue building our product and we have an edge on you. But with Web 3, we're more worried about more projects bringing more individuals into the entire network, creating more utility for everybody. So we're in the mindset of not building these moats. We did all of this work, exactly, building bridges. We want to help pull more people in and say, we were very lucky to have a successful raise, and we want other people who are equally or more intelligent than us to get their projects funded, because when all of these entrepreneurs move into the Web3 space, then the ecosystem is fortified, and we stand a better chance of eventually taking over traditional finance.
So, real talk. Put me in the moment where you guys make the decision that instead of pursuing a DEX, you're going to make this regulatory compliant system that you can then package up and kind of like toggle on and off a couple levers and give to these people. In my view, what I hear, total honesty, you guys are like, we can either bang our heads against the wall with regulatory nonsense, or we can remove the head banging for everybody else. But were you really, honestly, were you just looking at it and being like, I don't want to deal with this. Like, I don't want to deal with regulators for the rest of my life. I'd rather just fix this problem for other people and move on.
We're actually doing both. So we are still building the exchange.
Really?
So that's still like the main business model. Our capital that we raise is going towards the engineering, towards building this infrastructure. And it's a team of people who have packaged up all of our internal knowledge that is going out and doing all of the consulting. Because when you think about it, right, like where was the value created? It was the executive team that spent all of the time launching the token.
Yep.
And like the famous saying that we have from the CEO is, he said, all I wanted to do is build a business. And through the 6-month period where we were dealing with token purchasers, he said, I had to spend 70% of my time dealing with the token, the purchasers, legal, all of that kind of stuff.
Yep.
Right. So that's what we've packaged up and have kind of, we're pushing the entrepreneurs through it. We're still building. We still have an engineering team. We still have all of this.
Yep.
But the product that we're here at ETH Denver, DAO Denver talking about is this consulting arm that says, we have best practices. Hey, look at us. We want to help you. And the way that we do it, like we don't charge anything. Like we don't charge actual money or currency. We want you to launch a token. So how do we align incentives?
Take our tokens.
Take tokens. So we become a token partner with you. So you don't succeed, we don't succeed. So it's a very aligned model that we have.
I like that. I like that model a lot. So let's talk about how you would help me, right?
Okay.
So me and my 3 co-founders have been banging our head against the wall, trying to make sure that we can have a regulatory compliant token launch. And the problem is that if we offer somebody real estate, our view is that it's a security, which means that we have to comply with either Reg CF, Reg D, Reg S, Reg A. All of these have trade-offs. It's not like we can just like choose one and then we're good. We have the capital constraint on a Reg CF offering of maxing out at $5 million. That really doesn't move the needle if you want to buy this hotel that we're sitting in.
Yeah.
It's almost too much of a pain to even bother with, for $5 million. So we can't rely on that. So then there's a question of, can we stack it? Can we have like a Reg CF tranche and then have a Reg A tranche and a Reg D tranche, PPM, and have like institutional partner tranche, and like that's how we form our capital? Is that the right way to do it? If we do that, what's the approach to providing tokens to each of those constituent parties? Do they have to have separate tokens to be able to make that acquisition? Like, so all of these things are the constant time suck, like endless recursive conversations with attorneys that never really resolves. I don't know if you have subject matter experience on this, and it's okay if you don't, because frankly nobody does. Like, before you even answer, like let me handicap for you. We've spoken to the best attorneys in the country. Nobody has subject matter experience on this in a meaningful way. So I'm putting that out there right now. A lot of what we're doing is we're just trying to figure out what we believe the spirit of the SEC's regulations are, and we're trying to interpret.
I'll tell you a real story.
Okay.
But I need to preface all of this with, I'm not a lawyer, and I am not giving you legal advice.
Yeah.
I'm just talking about experiences that I've had.
Right.
As I mentioned before when we were talking, like I've spent time in the mortgage space, the real estate space, and prior to joining Tassin, I was with a project. We were tokenizing real world assets, right? And real estate is one of the best examples of a real world asset, right?
The best.
The best. But like the model's always the same, right? You take a thing, you put it in a legal entity, and then you take the legal entity and then you tokenize it, right? So I did this. With debt for the music industry. We had a stream of debt that we would buy up at a discount, we would tokenize it on a monthly basis, create series LLCs, and then tokenize and then put them up on markets where investors wanted, it was somewhere between like 10 and 12% yield on a pretty safe debt.
That's a great product, by the way.
It's a good product. Hard to scale, hard to operationalize, right?
Yep.
Really the trick was between the on-ramp of the debt into the crypto space, that was very difficult to get. Imagine a lot of small transactions. Real estate, you make one large purchase, you put that in, but having to have like 1,000 small purchases every month, wrap that up, tokenize that. But this was a few years back, so we were under a different light by the SEC, but we had to make that decision, right? Reg S, Reg D, CF, what do we do? And we ended up going with Reg D because of the investors that we were working with. And again, it was a decision.
Who were all accredited. And you knew that because why?
Non-US persons.
Okay.
Right?
Sure.
So when we did all the KYC, we did 2 checks. Well, really 1 check, because we didn't even care about US accredited.
When you said we did the KYC, Bud did the KYC, or you guys had an outsourced agency do the KYC?
And this is where it got scary, because we had an outsourced agency, but what I didn't learn until I'm working with this current project, and we have very good inside counsel, is that
you still have a vicarious liability, right?
I was liable.
Yeah.
I was liable.
Yeah.
A third party was doing my KYC, but I was liable to check and make sure that the data was correct, that the addresses weren't fake. I didn't know this. All I thought I was doing is building a really cool on-ramp into the crypto space.
Like, what are you supposed to do? Like, get on your skateboard and go, like, pedal up the block, knock on doors, and make sure, like, Mr. Johnson lives there and makes more than $300,000 a year?
One of the parts of this token launch platform at Tassin is a KYC workflow. And we are very diligent in all of the checks. So we outline, either you want to do it yourself, because it's like TurboTax, right? Tax is like a multi-path journey. But TurboTax breaks it down into a very linear flow and says, here's the master roadmap. We have to dive into these rat holes, and each rat hole is this linear flow of questions. We've done that with KYC. So you want to do a Reg D.
Hold on. Tassin has done this?
Tassin has built this.
You have built a proprietary product that mitigates my vicarious liability of KYC of accredited investors.
Yes. And not only that, it's like a TurboTax experience where you could do it, or you hire somebody in your company to do it, or we have a service where you can like rent out one of our professionals with the professional services. But we want everyone to understand, like, KYC is the company's. We want to remove as much friction from doing it. So imagine hiring somebody who has some sort of analyst level experience, and they say, here's a bunch of data from a purchaser. This is their name. Does it match the photo? Does it match the passport? Does it match the mail address? Does it match all of these things? Asking one question at a time and then documenting it all the way through.
Right, so the documentation is the critical component to this, is that this is a human-checked, documented process with digital backup, so that essentially you're improving my odds of winning.
Exactly. And look, the project I was doing this before, when I was
Can you insure a group like mine? Can I buy a policy against this? Because I don't want my cash.
I don't know if we're the right ones to.
Right. There should be a third-party policy that I could buy that is cheap based upon your group's, demonstrated diligence in verifying this data. It should be pretty inexpensive. It should exist so that
somebody who's very good at insurance will come into the space and do this.
I think someone should do it right now. I think it's an amazing sort of bolt-on, third-party kind of like JV. It's like it's a strategic partnership for you guys.
What was the Super Bowl ad from Rocket Mortgage, Rocket Home? It was, you put your credentials in, we say that you're validated, you're pre-authorized for a certain mortgage, and that they insure it. Remember this?
Yeah, actually, I do remember this.
The people that do that kind of actuarial science are the people who will come into crypto and start insuring this type of stuff. We're not there yet, right? The market is not there yet.
Here's the deal. There's $2 trillion in crypto right now, going to what? 20?
Depends who you ask.
Yeah, okay.
20 surpasses gold. I think we'll get there.
I think we'll get there. Okay, so if you're talking about an industry that's going to 10x, it's already at $2 trillion. And, TradFi is moving into DeFi. There's going to be increasing needs for insurance products for all manner of these things.
Yeah.
But certainly, if you take the view that basically everything is a security, that's not an unpopular view. There are very many attorneys you speak to who will be like, everything is a security.
In the KYC platform, we treat everything as
Like
a security. The token that we launched is not a security, in our opinion. It's a utility token that's going to be used in the exchange we're building. But we did KYC as if it was, because like Tassin as like a company and like our end vision is to be known as the U.S. compliance company in crypto, right? Like Intuit is known as the small to medium business finance software company.
Yep.
Right. So we've joined associations and have memberships at the legal level, such as we're one of the members of the Blockchain Association. We just joined. My lawyer's going to kill me. I forget the name of it, but it's another international organization that is lobbying and promoting best practices in the crypto space. But we're always looking 6 to 12 months ahead to see what do we think the SEC could rule on. And a lot of that's led us back to, I don't care if you're launching an NFT that you can breed and get these derivative tokens coming out of it, because
that's a goddamn security.
That might be, exactly.
I mean, in my view, that's going to, okay, when I say that's security, that's not my opinion. That's my opinion of what I think they're
KYCing you, right?
Correct.
So like, yeah, I mean, I come from like proper security, right? I worked at BlackBerry when I was younger. I worked at a few other data security companies. So like, I always want to do things the most secure way, the best way, because it's eventually going to come to that.
You guys have to, I guess, obsess over every memo, document, quote, speech, email, tweet that has anything to do with the regulatory space. I would imagine you guys are just laser focused on that.
Yep.
And I would imagine you guys are constantly making sort of some kind of like calculus on what you think the trajectory of regulation is going to be. And you said you're looking out 6 to 12 months. What's happening in the next 6 to 12 months, do you think, in the space?
Well, we're starting to see crackdown. I mean, this week, right, with BlockFi, so anything that talks about yield is starting to come under scrutiny. I don't have a very well-informed comment on that, but look at. I mean, the SEC fined BlockFi this week, $100 million. I forget if it's for their yield product or their lending product, but yield's starting to become like a target word for the SEC to go after. What comes next? I'm not sure. I think NFTs are low-hanging fruit.
Especially the ones that are throwing you bananas or whatever.
Right.
You know.
Or that are so expensive that DAOs are forming to purchase them. And then what is a DAO who purchases a NFT?
A fund.
It is LPs going into an LLC buying a building.
Correct.
It's the exact same thing.
Yes.
Right. So I think the thin veil that's put over NFTs being art is going to be lifted very soon.
Yeah.
But it just goes back to, we need to KYC people, right? Like, we need to treat this like, if we want DeFi to take over traditional finance, then we have to act as if we are humans and have identities, right? Like, I get a lot of people made a lot of money, or a lot of people have personas that are anonymous online, but like, one of the panels before we were speaking yesterday was a lawyer talking about pseudonyms and aliases being held up in court. Like, you could sue somebody as an alias. As Banksy, you can sue somebody for infringing on your IP, right?
Right.
So it's
like a DBA.
Exactly, right? So it's like, okay, maybe your KYC might, like speaking future, right? Maybe when you KYC, you're not Bud White, right? You're some pseudonym that I go by in communities, in art communities.
What is that pseudonym, by the way?
Not unveiling that.
You're not going to dox yourself?
No.
Okay. Yeah, I mean, look, absolutely, there's validity to the pseudonym. At the end of the day, the pseudonym attaches to a person, you know? So a wallet is a social security number. The name is immaterial. You know, it just doesn't make a difference. However, I think there needs to be a space for anonymous transactions online. And my particular worldview on that, I think, is different from other people's. I actually don't know why other people are generally interested in sort of like radical anonymity. I have some inkling of like why some people want that, but for me, my particular interest in it is, you know, I look at where my family came from. My dad's a Jew, my mom's Dominican. My grandparents fled Hitler, my mother fled Trujillo. I would like the idea of being able to take my assets with me and not being asked my religion, my nationality, my ethnicity, my sexual orientation. Like, I like the idea of being uncancelable in that way, and to really be able to benefit from crypto, to really be above censure, you require that anonymity. So I don't think that anonymity and KYC are at odds. To your point, I mean, I think the point you're trying to make is have a million aliases. At some point, that has to funnel into a KYC, and a whitelisting of that wallet, and then that wallet is free to operate and anonymously, however it deems fit. But at the point of origin, you need to have KYC on any wallet.
Yeah, I agree. But something I want to say about that point that you made, do you really want truly anonymous transactions, or do you want the ability to always have access to what is yours? So to go to what happened in Canada this week, right? When the government came in and seized assets, is your desire to protect against outside individuals or organizations coming in and seizing what is yours, or do you truly want the anonymous? Because, and again, this is the security side of me. Let's go back to another thing that happened this week. Build DAO was, let's not use the word hack, but I think it was something that was going to be voted on, got through, gave somebody 51% voting power over the treasury. They liquidated it. They put it in a mixer. Now it's gone. That was like $450,000 gone. So anonymous transactions could lead to a lot of mayhem, but having the power to know that no matter where you are, if you're fleeing a country, going to another one, that you have access to value, I think that's a different argument than anonymous and KYC.
Well, I mean, I guess the place I link them is I buy a house in my name. I decide that I have access to an anonymous wallet. When you send it there, now there's a trail, right? Mm-hmm. That digital trail it exists.
Right.
You know, and so if I had my druthers, I wouldn't buy any asset in my name.
Right.
None.
Right.
Ever. I would never want anybody to be able to be like, oh, look this guy up. All right, there's his house, there's his mortgage, there's his car, there's his business, there's his income, there's his yacht docked, oh, here's his airplane. Now I'm going to write code so that I know where his airplane flies every single day. Now I got to pay some kid $5,000 to not put it on Twitter.
Right.
I would much prefer to have supreme privacy.
Right. So, anonymous transactions separate from privacy. I get where you're coming from.
Now, how does that relate back into a world where we're able to KYC people, we're able to use a service like yours, we're able to remove the vicarious liability? Because here's the next problem, right? You're KYCing potentially anons. So you're doing this work on my behalf, but what's the quality and the accuracy of that work if those wallets exist the way I'd like them to, which is like completely anonymous? Like, how is that even possible? Is it possible?
It's not really today. And I mean, will there be guidance around, again, we're connecting two ideas that we were talking about yesterday in the conference. This idea of like pseudonym-owned wallets, right? Or pseudonyms being defensible in different legal matters, and being able to KYC them. right now, we don't really have any guidance, right? We're only KYCing individuals with their like legal given names, right? But who's to say there isn't a near future where you can be KYC'd by the name on your wallet, or sorry, by the name in your Discord, and associate a wallet to that and purchase.
That's terrifying to me, because under that fact set, that requires that the government have some sort of like a data tree for every individual to understand our manifold aliases across the digital universe.
Right, but that's one way of looking at it. The other way of looking at it is, let's say you're an issuer.
Yep.
Right? There's a bunch of purchasers out there that want to purchase partial ownership in your project.
Right.
And if a individual who is a politically exposed person on a known terrorist list wants to give you money, you're now rolled up in that tainted
cash pool.
Exactly.
So let's play this forward. So like, let's say we live in this world, everything becomes more or less treated like a security. Therefore, everybody is being KYC'd, right? Is that kind of like the bull case for your business? Or are you guys sitting there saying, we think that in reality, the SEC is going to come down on the entire crypto space and say basically an NFT, that's a security. It doesn't matter if it's $1 or if it's $1 million. If there's multiple owners of a single NFT, I can only imagine, if it's a non-marital asset, then it's an investment. And if it's an investment, it's a security. So like all of those end up being securities, right? And all of these utility tokens that are frankly not become a security. What does that do to your business? I mean, have you guys like set a pin on the map on where you think your revenue goes if regulation follows what you think its trajectory is?
We've made projections.
Yeah.
But at the end of the day, people don't want to go to jail.
Yeah.
Period. Right.
Yep. And
the way that we explain this to people is, think of the business that you're building as like a house, right? And the SEC and the regulation is like a flood that you hear is coming. So we're sitting here saying, we're going to help you put sandbags around your house, right? We have all of these different checks and balances that you can dial up, dial down. At the end of the day, you make your decisions. And we can help you put those sandbags around. We don't know how many sandbags you're going to need if the flood comes. We don't even know if a flood is coming. Right. But what we're saying is better safe than sorry, because you don't want to be the one that the SEC makes an example out of for something that has happened.
Right. So have any of your clients fallen under scrutiny yet?
Not yet.
Okay.
I say yet because I think in the fullness of time, the SEC will take a look at everything. It could just be a passing look.
Every single project you think will get eyes on it by the SEC?
I mean, it's hard to say. I mean, any entrepreneur who's doing business in this manner, in the traditional space, gets eyes on them in some way. Maybe it's when you pay your taxes and the IRS tips something off to the SEC about something they notice in your cash flows. They might just take a quick look, they might take a formal look. But the SEC in the fullness of time looks at almost everything. And I think the same was going to be true with crypto. It's just taken a very long time. If you look at...
Why? Why is it taking so long?
Resourcing, the same reason there isn't incredible capital from institutions in the market yet, right? They have to... The same reason why 2021 was the single greatest year for net new engineers coming into the crypto space. But it's still a drop in the bucket compared to the tech sector.
Right.
Right? It's just going to take time. So imagine 5 years ago, a team of 3 people at the SEC, I'm only guessing, right? And now they've armed up to 50. That's still nothing compared to what is needed to take a look at everything in the space.
Right. Right. So, okay. At the moment, what we're being told by people we think have some clue what they're talking about is that we're going to hear something from the SEC in about 6 months. That there's going to be a little bit more clarity, a little bit more direction, and that it's going to lay out what we think is going to be more formal language around how much of this stuff is a security. And the attorneys that we're speaking to are like, all of it. Just like straight up and down, there's like 3 coins that aren't a security. It's like Bitcoin, Ethereum, like one other coin that got
I only thought it was 2, but if you know of a third, I'd like to hear.
There's like one coin that got a no action letter for some like in-game utility token or something.
Okay.
So basically they're saying that there's 3.
Right.
Like if you're not one of those 3, you got to go Reg D, you got to go Reg F, Reg CF, you got to go Reg S. You have to find a path to the market and treat this thing like a security, right? Is that in line with what you guys think?
I think it's hard. Once something has been offered to the public and is being openly traded, it's difficult to KYC after the fact.
Yep.
And like the large projects, right? I mean, KYC is taking place on most exchanges. I mean, not decentralized exchanges, but like I think the burden is going to be placed on the points of exchange, the OTC desks, all of this. I think the problem with the existing N-3 projects, right, is where can they be traded? As soon as there's a determination that they are in fact securities, well then the exchanges that are openly not trading securities because of the way that they're being regulated and the approvals that they have or do not have will prevent them from trading securities. We're going to have to see a shift in that, right? If everything becomes a security, then
that would probably be for the better, because at the moment, for example, the reason why people knowingly delude themselves or lie and say that their security token is a utility token is because there's so few places that you can trade those assets. You cut yourself off from the vast majority of all potential users.
Yeah.
And so if all of a sudden Coinbase was a regulated exchange where you could trade security tokens, because everything on it already is, in the view of some of the people that I speak to, at least at that point, you're just like, okay, so now I have a place where I can go trade my product, right?
Yeah.
And I think that would be for the better, frankly.
And like there's projects that are like being built, like I have friends at a company, it's called IX Swap. They're trying to build a DEX for securities.
Yep.
It's like, it's needed.
Super, yeah, absolutely.
Because I think you're right, like in, what was it called, the prudent man test or whatever it is, right, when you really sit down and look at it, like, is it or is it not a security? Like, well, what is a security? Like, why are all these laws around securities? And it's because in the 1920s, right, people would like run around and say, hey, John, I'm going to start a company. I need you to put in some money. And people who weren't accredited, right, which meant like didn't have sufficient net worth to sacrifice what they were putting into a moonshot, right? People would put it in, and the guy would skip town. Say, huh, cool, these guys gave me, $1 million, run away, okay, whatever, right? All these laws are around protecting the investor, right? So like, are these things not being securities in many cases, right? Like, who are we harming here? We're harming the individual investor. How does crypto grow? When everybody uses it, right? So we need the SEC to actually just make a decision and say, what is or is not a security? In my opinion, if a lot of these projects were deemed securities, and as a ecosystem, we went through and started creating securities exchanges and calling them what they are and not letting people get into them, because like whether you're buying equity in a company or you're supporting a token project by buying pre-sale utility tokens, you're still betting on founders and an idea and that it will grow. And regardless, like let's say the barrier to entry is the same with the KYC because they're both securities, crypto's always going to win because you get liquidity easier, right? Like you're not buying equity and then in 7 to 10 years, like getting a liquidity event at an IPO.
Yep.
Right? You're
immediately liquid.
You're almost immediately liquid. So it's already a better model even if the KYC and security designation was the exact same on both sides. So it's not going to hurt the industry. It's only going to help,
Right.
because it's going to bring in more people, right? Like individual investors, if you call these things securities and you give them a platform to trade it where they're trading other securities, it's just going to make everything work well
Is
together.
that a bullish slide for Tassin though? I mean, because
For our exchange, it is. For our exchange, it is, because what are we building? We're building an exchange where retail individuals and institutions can trade crypto like they trade other assets. How do you trade other assets? With assets in a custodian and never giving the exchange your asset until you settle. And then you settle with, in the traditional markets, it's clearing participants. In the crypto markets, it'll be bilateral between you and I, like the direct settlement. And having one platform to trade equities, fixed income, derivatives, crypto, like that's the future.
So is your business model essentially that this regulatory tool for now, while we're in this regulatory like liminal state where we have no idea what's going to happen, is just a tool to give some sort of structure to these securities, which you're subsequently hoping to migrate over to your DEX once all of this is clear and that service is not needed? Is that essentially what you guys are doing? And there's no shame in it. What are you laughing at? Like, I think it's a great model.
Because you put it together, right? It's a very vertically integrated model.
Yeah, I mean, it's a great model. I mean, today this is what you need.
Right.
You know,
exactly.
like right now you sell people a winter coat because there's 6 inches of snow in Denver.
Yeah.
And in the summer, sell them a t-shirt.
I get asked this with every project. So you can help me launch a token? Yes. And you're going to put it on your exchange? I can't say yes, but like you see where this is going.
Yeah.
Right?
Yes, of course.
Yeah.
Of course. I mean, I do see, you know, is it illegal for you to say that already? Is that sort of like, is that integration illegal right now? Just
if I am saying that your token's a security, then the exchange we're running, we do not have the legal ability to trade securities.
Right.
Today.
Right, exactly. So what you're doing is you're making these clients durable so that they can survive the scrutiny of regulators that you know is coming, so that you can subsequently take that client and port them over to your DEX once it's able to trade that security.
Exactly.
Yeah, I mean, I think that's a great model. You know, I think, frankly, I think articulating that model makes me more interested in working with you guys.
Well, right, and this has always been a point of confusion with Tassin, right? You go to our website, what does it say? We're building an exchange. But we come to these conferences, and what is our messaging? Our messaging is, we want to help you launch a token.
Yeah.
And the brand that we're creating is, again, like a suite of products in the US for compliance in crypto. So everything we're building is fitting in, right? Like Intuit has TurboTax and QuickBooks and Mint and like all of these services. And that's what you hit the nail on the head, right? We want to build durability into our clients, right? We want them to last. We want them to be able to tie into a full suite of US crypto compliance products.
I mean, I think that's a wonderful pitch. Cold shell. I think that's a wonderful pitch. Honestly, I really do. Because, you know, like, nobody likes buying life insurance because you're like, I don't know. You know, it's a bad feeling, right?
Yeah.
It's a bad feeling. But your product, what I like about your product is, as the company that's going to bring my token to market with you guys, I know that it's in your best interest to make sure I succeed for the long haul, right? And if you're actually interested in building, you know, it's also an interesting, the kind of clients you probably have, right? Like, you cannot have ruggy type of clients,
right?
You know, so I think it's sort of an interesting sort of like, it's like a certificate, it's like a stamp of approval.
You're right. If you're willing to KYC your purchasers, then you're probably not a rug pull. It's a decent line of thinking. And like, look, like we've gone through this. We've helped clients launch tokens. And there have been instances where we reach out to do KYC and somebody says, no, I don't want to do this. And we say, well, like, we don't ask them why, but like internally we're like, what's this person got going on?
Yeah,
right?
For sure. Yeah, I mean, I think I think it's actually it's a pretty good pitch. I like this. So okay, let's where does rubber meet the road? Like, you guys take tokens. Is there like a relative range that you're comfortable sharing, or is it like project by project? How do you?
It's project by project.
Okay.
Typically we're looking for projects that are trying to raise more than 10 million worth of like US dollar value through a token raise, and then that makes our economics and services a small enough portion of what we're taking that it doesn't seem like a lot.
Yep. Yep.
But
because your business is interesting, because you're not like one of these projects that has like absolutely like no variable cost. You have a variable cost associated with the the total number of people that you're KYCing, because it's human.
Right.
It's human audited.
It's human. Yeah.
No, that's really interesting. Wow. I honestly think we might use you. Frankly, I think
We have a lot to talk about. We need to.
Well, let's go. Let's do it.
We need to lay out the map of all the things that you care about in terms of your business and who you want to invest in it, right? And then it's a detailed conversation, right? It's not like like management consulting where we come in with like a PDF and we say, box 1 says do this, check, right? It's like it's our executive team who's gone through and done others coming in and saying like, okay, like we have to sit down, we have to talk about what you guys care about, what you're willing to bend on for to have suboptimal to your like ultimate business goals to meet security goals or regulation goals, and like have that real conversation. But what we accelerate, and this is what we really tell the teams is, and again, you sat in and watched my talk. I said, how many people here want to launch a token? All the hands go up. How many people don't know how to launch a token? All the hands go up, right? So what do we really do? We come in and tell you all of the unknown unknowns. We tell you all the decisions that you didn't even know you had to make. And then we say, here are your 3 options, and these are the trade-offs on these options. What's important to you? Walk you through it, and then help you get the services. Again, we're not lawyers, but we basically set up the entire package for you to then take to a general counsel, have them say, this strategy I can bless, and move forward.
That's a shill right there. That's a shill and a half. Shill. It's a good shill.
It's a good show.
That's a good shill. That's a really good
But again, like, we have had friends in our community come and say, help us, right? And these are the conversations we have with them.
Are you being successful, with the portion that how many companies have you done this with so far?
I mean, we've only been working with outside companies for 3 months now.
Okay, wow.
So the number's not high,
Yep.
but we have a lot of people in our pipeline that we're ramping up, getting ready to go and do this. Because the other thing's timing, right? A lot of these, I know that we're at Dow Denver, ETH Denver, but a lot of projects we're working with are like DeFi companies doing utility tokens. So they're interested, like you're interested.
Yep.
But if you and I decide to do business today, when's your launch date?
Yeah, 3 months
4
from now,
months?
4 months from now,
Right?
exactly right.
So
yeah.
we have a lot of conversations where, again, the packaging up of this information is quite new for us. So,
what's really interesting is I'm meeting all of these companies that are working on solving like the very laser focused problems of legal formation, capital formation, and then downstream from there. But everything else is downstream from there, which is to say, like, the first guy you meet on this path might be somebody that we spoke to, Adam at MyDAO, who is forming these entities in the Marshall Islands. That's why it's MyDAO, Marshall Islands DAO, right? He's like the mouth of the transaction, right? He's probably your first phone call. That's your first step on that path. You might actually be the second phone call, right? It's like, all right, I have this legal entity that I think will protect me from whatever. It allows me to operate as a DAO the way I want to. Now my next question is, how do I capitalize it? Because that's what we do in the Web3 space. We just make a container and then we go to the community and have them fill it with capital. You're probably the next call to figure out how to do that, right?
Yep.
And that's interesting to me because as people that far upstream in the transaction, like there's an enormous opening in front of you to kind of direct that energy, to direct those organizations and those founders towards VC capital, towards other infrastructure that they may need, joint ventures, strategic partnerships. And if I was a guy who wanted to be the recipient of some of that energy, I would want it coming to me from a group that did the work of making sure that that foundation is legally sound.
Yes.
And so what's really interesting to me isn't precisely what you guys do, which is obviously it's interesting, it's necessary, but it's it's a utility for the most part, or at least it's viewed that way because the outcome is, okay, now I'm able to sell this thing. But what's really interesting to me is the people who are likely, or the organizations that are likely to use your services, are more likely to be the organizations that are going to be here in 5 or 10 years. So I like this kind of weird sieve that you guys operate as, because if I'm a VC or if I'm an investor or if I'm somebody who's looking for strategic partnerships, I'd rather get somebody that came out of like Y Combinator than somebody who came out of like bankruptcy court. Right. So have you guys thought about what that looks like?
Yeah, you bring up a good point, right? We're kind of doing the sifting on the onset, right? We don't want to even invest like sales time starting to talk to a project that doesn't have legs. And we talked to a ton of people. Like you were there yesterday. I said, because I had the drink tickets to give away for the event, and I said, I'll trade you your token ideas for drink tickets, right?
Yep.
And heard some fantastic ideas, but also heard some ideas that were literally just ideas. They weren't business ideas. They were just ideas.
Yep.
Right? And we would really suss that out in some of the early calls to make sure that you're building a company, right? The talk I did yesterday was like the Web 2 playbook versus the Web 3 playbook. The Web 2 playbook is you go to an incubator like Y Combinator, or you go in and get like Andreessen Horowitz to put in for a seed, right? If you're farther along. It's like, well, what's the Web 3 version of that? And like, we're not a venture capital firm, right? We're consulting on best practices right now. But when you really sit down and think about it, what do? We take projects, we invest through services to move them from like, let's call it like valuation 1 to valuation 2. And the difference is really just the formation of the business entity, how you're going to do business, and setting up all of the how, not even bringing in the investors yet, the token purchasers. And then we help you get to market. Essentially, we're taking tokens. So we are kind of like an incubator in the sense that we're helping you move along, and we're taking some sort of financial stake, not currency, but some sort of financial stake in the project. We do investing from our own treasury as well, not with all projects, but projects that are already well on their way and need a little bit of financial kick.
Yep.
But yeah, I mean, I don't think it's a stretch to look at the model that we're building here and say like, that's kind of what a Web3 venture capitalist looks like, or
that's
a Web3 incubator looks like.
That's precisely what I think you guys are doing.
And again, like the two warnings on this is I'm not a lawyer, but also I'm not a broker dealer, right? But we have investors in our network, right, that have worked with us that we are openly speaking to. When projects come around, of course, there's going to be conversations, right? So yeah, we want to make sure that we're working with high quality projects because we play a role in the community, right, in the crypto community. So if we are helping a project along, it gets eyes on it. I mean, not like everybody sees it, but like within our network.
So let's talk about another stakeholder in that ecosystem. Yes, you get the good founders who care about, being regulatory compliant. But then after they build this token, and then after there is some SEC guidance, and it's deemed to be a security, and it ends up on your DEX. I think if I'm buying securities, particularly before it's deemed a security, I think I want companies that have gone through this process as well, right? As a guy who's going to invest in a token, I think I would like to know that the SEC isn't going to XRP me and freeze my token, which like, thanks SEC, like they decided XRP might be a security, so then I just couldn't trade it. Still subject to market volatility, but it's like just like stuck in like my Coinbase account, you know, I can, or crypto or whatever it is, and like I can sell it or whatever, but I don't want to have an asset that has an asterisk next to it in my portfolio.
Right.
So I think there's also this other kind of consumer here that you're also servicing in another way.
I think it has the potential to grow into that, right? I mean, like the projects we've worked with so far are trying to build widgets in DeFi, right? There's a company we're working with right now that is trying to take like the Discord model and build a decentralized version of Discord. There's a company that we're working with that's doing like a Zapier in the crypto space, right? Like these aren't even rug pullable ideas, right? Like you're coming and you're saying like, we are builders from the Web2 space. These are things that we knew how to build prior. We see a need for it here. And they're going to be these very durable projects because they're trying to really fit into the ecosystem. And like, is that a property of them coming to us? Maybe, you can allege that. But I think it speaks for themselves, right? Like, was Airbnb a success because it went through Y Combinator? It was probably going to be a success anyways.
Sure, of course. I agree. But people who drive Volvos are different than people who drive Ferraris.
Sure.
You know, and
I get what you're saying.
You know, if you're looking for somebody who really doesn't like risk, and he pulls up in a Volvo, you're probably like, yeah, that's my guy. You know, if he pulls up in a Ferrari, you know, maybe you're thinking, that's not my guy. That's probably not my guy. Anyway, I think we should talk about how you can help my project.
Sure.
I think my co-founders would love to hear exactly this. We have it on camera now, so you don't have to repitch them. I'll just send them the footage.
Sure.
But we should speak soon. We should set up that call. You want to shill us out on your project?
How does one shill out?
Dude.
My elevator pitch?
Yeah, dude, you got to go shill hard. Just
shill hard? Okay. This is my first shill. So we're Tassin, tassin.com. If you have a token project that you want to launch, a utility, an NFT, a DAO, anything that you want to tokenize, we will help you through the process and get a strategy together for you and make sure you can launch that token.
It's a good show. It's a good show. You're Canadian, so it's like a low-key mellow show. It's like an honest show.
It's an honest show. Yeah. I get that a lot.
Yeah, I like it.
Yeah.
I like it. It's a good show.
Oh.